All right, beautiful bosses. We're gonna start here just in a little bit. Had to make sure my little one was okay. My little ones. So we're gonna start here in a little bit. Let me go ahead and connect my media here. I love to be able to share with y'all my screen because I feel like that helps you to learn something. So let's see. All right. So I am going to be streaming on Instagram tonight, which is why you may hear feedback. So I'm going to try and mute out so you can't hear that. Uh, Let me go ahead and bring up my slide. How are you beautiful people doing tonight? If you are watching this as a replay, put replay in the comment section. Let me know where you are coming from. Let me know where you are going, where you live, where you're trying to move to. If you are a first time home buyer or you're looking to become a first time real estate investor. Okay, get this shared with y'all now. Can you see my screen? Can you see my screen? Okay, I think my screen is up. I want to make sure y'all can see it. Let me go to center view here. Okay. I don't even want this size showing. Let's see how we can make this happen. Right. All right. So you guys should be able to see my screen now. Yes, yes. All right, my beautiful bosses. So tonight we're going to be talking about. All right. So I know if you are watching me on Instagram right now, you may not be able to see the full presentation here because it is cut off for a live presentation. So if you find me on Facebook or YouTube at Pumps and Profit, you will be able to see what I am talking about tonight. So a part of that screen will be cut off because of how you know how Instagram does. They have it to where it's a little skinny screen, but you can find me on Facebook or YouTube at Pump to Profit and watch this live right now. Tonight we're talking about how to get your loan funded and closed. There is a difference, and I want to make sure that you are in position to be able to do just that, get that loan funded and closed. All right. So there's no point in me showing myself. Hey, beautiful people. So let's get right into it. All right. So if you are applying for a home loan, whether you are a first time home buyer, where you're looking to find your primary residence, or even if you are a first time real estate investor where you are looking to get your hands on some property. This, my friend, I don't care what the news say about the rate hikes. If you are able to become funded, get funded and close, then my friend, this is still a good time to be able to buy. Why? Because what I love about real estate is that it's forgiving, which means you can always refinance it and potentially you can always sell it, right? So you may be wondering if you're in that process at the beginning where you're trying to find out, can I actually get a home loan, whether that's for primary or for an investment property? Well, here's some things that you may be also wondering. Which loan should you apply for, right? So go back, watch previous lives, and then you'll know what type of loans should you apply for. There's different ones that we talked about in terms of what you should apply for. But the good thing is, usually there is a loan for you, okay? From bank statements to regular traditional 30-year loans, VA, FHA, conventional. We have loans 1099 workers, business owners, all type of loans out there. So don't feel like there's no situation for you. There is a possible loan for you. This tonight is not for anyone that's looking for fix and flips. I'm going to tell you now. We're not going to be talking about that tonight. We're not going to be talking about wholesaling. This is about being able to get your loan funded and approved. Okay. I am a loan officer, but anything that I say tonight is not a commitment to lend, and everything is subject to credit approval. Okay. Now, you may be wondering, what documents do you need? How much money should you have available? These are some of the questions you may be asking yourself whenever you're ready to obtain that loan, right? And going through that mortgage process. It's almost like nobody, and I've searched, and I haven't, and you can send it to me. Send me a link if you have, but I have not seen anyone that has been able to show me the full out mortgage process from the back end and showing a customer how to be a borrower to be able to really understand the whole process, because there's different nuances, there's different terms that you may not know that is in that's in the mortgage industry that may throw you for a loop, and there's some ambiguity because a 30-second clip, a 1 minute clip is not going to be able to tell you whether or not actually the full program or what that program can actually do. I see where individuals are also speaking on that, you can't buy less than perfect homes now, or, your house got to be near perfect in order for you to get a refinance. I mean, a purchase. Some of that, if it is as is, sometimes depending on the loan, if it is an FHA, you can be able to get a renovation loan, right? So there are programs that allow for you to get that renovation cost in your loan so that you can still be able to purchase that home, not just for investor purposes, but also for primary residences. So always be on the lookout for, properties are not going to be perfect, but if you feel like you are ready to move forward on that loan and see how you can be able to benefit, then there's nothing wrong with you applying and knowing what to do to prepare and to be able to qualify for that mortgage loan. All right. Now, there's a difference between being funded and closed, right? So when you close on your loan, you can now finally move into that home or rent it out, or now you can be able to, now you're recouping your money from that sale or that refinance. This usually happens because the lender has signed off on the loan and said, hey, we're willing to purchase all right, versus funding, which means you got to qualify for this loan. And we're going to talk about these, how you can do both here in a little minute here. But that means you got to qualify for the funding part of it, right? You got to be able to say, hey, this is my piece of the pie that I'm bringing to the deal in order to make this deal happen, right? And then also, can you be able to have the ability to fund that loan, or you start the loan process during and after. And so, from a lender standpoint, when it comes to is this a fundable loan, usually a lender, this is behind the scenes as a mortgage process, usually when it comes to a lender, they set that loan off to the secondary market, which is Fannie and Freddie, right? Or Ginnie, right? They sell it off, which means, if you ever say, hey, I signed a mortgage loan with such and such lender. Well, why am I receiving mortgage payments from let's say Benchmark, right? Well, that's because there's a difference in you closing on that loan with someone actually making sure you make your payments. All right. So your loan, that means it was funded, and now you got to make the obligation back. Okay. And usually a lender sells your loan. All right. So let's talk about the mortgage process. One of the things I've seen I get mortgage alert. One of the things I've seen this week is that mortgage applications are on the rise for the third straight week. Now, the news always putting out certain things, right? The news always saying, hey, there's a deficit. There is no one, there's homes coming up. There's no way that individuals are able to purchase these homes. Um, and it all comes down to mortgage affordability. And I want to make sure you can afford what you're looking to purchase tonight. Okay, we're going to talk about that. But before that, you got to understand the process itself and what you have to go through. All right. And so, with there being a rise of so many individuals putting in mortgage applications, there's going to be more questions. That means there's going to be more lead times in terms of getting appraisals, things like that in your home. And you understand, real estate is a cycle. If you think about it, rates are going to go up and down, right? Because it's based on the market. And then the market itself is going to either be a buyer's market or a seller's market. And usually, and I hate to say this, but I have to say this, sellers, you can win, whether it's a seller market or a buyer's market, right? Because if it's a seller market and there's least there's less inventory, now you're creating demand, which continues to drive up the price. If it's a buyer's market, there's demand because you might get multiple offers that allow for your home to go for more. So either way, the pricing of that home, purchase price of that home is going to begin to rise, which allows for your area to appreciate for more. And that's why you get higher taxes in your area. But ultimately, you're also able to borrow more because you've built up more equity in your home. All right. So real estate is a cycle. So right now, if you are looking for properties, I would say even if you're not ready and you're getting ready to get ready, still be looking at properties. Still be looking at what homes are selling quickly, what areas are beneficial in terms of when it comes to schools. How can I be able to, when I am in position, what are some homes I like? Now, this is for investors or primary buyers, right? What are some homes that I like that I can be able to, when I'm ready, this is the style of home that I'm looking for. So when you know what that is, now you're able to be laser focused on what you want to buy. And here's the thing, right now, the reason why, and this is part of that cycle part, right? The reason why there's an influx of mortgage applications, and this is almost every year. When people have families, they want to move. Simple as that. They want to move before the school year starts. So they're looking at homes in those areas where they're able to have a good area to allow for their kids to be in that area because they are looking right now, which is why you see an influx in mortgage applications. What's also happening in the market is that a lot of individuals are beginning to sell their short-term rentals. For one, some of them are selling it because of the market, right? It's become saturated for them. But they're not being able to be highly qualified. So a lot of individuals that go into Airbnb, but may not necessarily be ready for the Airbnb and the short term rental market. And so they tried it, they putting it out back on the market. So there's a lot of things that's happening in the market. As long as you keep your pulse on there, when you are ready, I'm gonna help you get ready. Okay, I'm gonna help you get ready. But when you are ready, you're able to take on that property. All right. So this is really the layman terms, the best I can break it down in terms of how this process will go. You put your application in, you can get approved. Now I put a disclaimer here. There's two types of approvals, right? I'm saying this because you need to know. There is a difference in the approval process. Now, if you're talking to somebody that's backhand, okay, behind the scenes, I'm telling you so that you will know. You can get a pre-approval letter, right? You can become pre-qualified, which means they did a basic check, just ran a soft check. Oh, yeah, I'm just going off of this, no documents, boom. Okay, I got you pre-qualified. Like based on what I have here, old stuff, you could pre-qualify. Pre-approval, there's like I said, there's two. The first one that usually happens where a loan officer hasn't collected no documents, right? But you completed an application, they pulled your credit, and they say, hey, I got you pre-approved. That is based off of an AUS. All right. What is an AUS? An AUS is an automated underwriting system. Basically, the computer said you qualify, right? You qualify. A computer said the automated system. But what happens is now we have a team of lenders, we have different lender partners that we do that is willing to do an underwriting approval, right? So with an underwriting approval, which I love more, right? There's not all lenders do not do this. Okay. All lenders do not do this. The underwriting approval, and this is on a TBD, and that means to be determined, right? An underwriting approval on a to be determined property. This is when you collect docs. Okay. This lets you know, lender said, I can approve you. I checked all your documents. And I can say against the AUS, you got to pull that regardless. Against this AUS and what I've seen, the documentation you turned in your application, yes, I can get you approved. Just go find the property. That, my friend, is one of the best ways to get approved for a loan. And not all lenders do that. Okay. A lot of lenders don't want to fool with that because you put in all that work and they're looking at it. I think these are still human beings, right? They're looking at it and then you go close, right? You don't want that. Your pre-approval only lasts up to like 90 days because then we got to pull credit, right? But you want to be able to have that pre-approval when you go and look for a property because that lets them know that you've done the work, get that right. You know you have the funds close on that, which helps you be able to have the leg up on a lot of buyers. Okay? So after you submit the documents, as I said, it goes back to the underwriter. They let you know or not. Okay. And they're going to say, hey, we need a couple of documents to verify what is on this application. Then it goes back to the underwriter. And they say, okay, we check that off. Once they check everything off, now that final check, they're gonna look through, and I'm gonna show you what that final check. Say, okay, it can really close this loan. Let's go ahead and close it. We'll so getting your loan is the biggest thing, right? We can close a loan, but you have the ability to get it funded, right? So you want to be able to pay for your appraisals and inspection. Appraisals, you can be able to pay for it. Some lenders and brokers will pay for your appraisal if they, some do that. They can be compensated back for that loan to help you save money. But appraisals is going to vary, right? So you got to have the money that so hard for you to get the appraisal to say this house is worth this amount of money. All right. This is even if it's an as is property. Still gonna have to see the appraisal because the lender is gonna want to know, is this property worth the price that you looking to buy it for? They remember what I told you. Lenders ain't trying to take on no risk. They want to take as little risk as possible. So if you allowing them to take as little risk as possible, You're going to win and they're going to win. Okay? It's awesome. I promise you. This is very important. You got to get an appraisal. You got to think about inspections, termites. And honey, this is for yourself. You need to know, is this property able to be moved forward? Now with commercial, difference with that's primary, right? You still want to do it with a commercial property because you know money is fixed, right? And so an inspection is going to show you VA loans and purchases. You definitely want to do that because you need to know what you're walking into. Once this loan closes, you got to be able to repair it, right? You got to be able to make those repairs, aka money. All right. So you want to make sure that you are fundable. Now, down payment. Down payment. I know when you do a if you decide you want to do a wholesale deal or a fix and flip, you gotta have some money to put down, right? This is not for wholesalers out there. Wholesalers, it's a little different. Use wholesaling. You need some money for a down payment, right? Go and find a house and find a buyer and connect it and get your money. A down payment is going to be needed whether you get a commercial property or a primary residence, right? It's going to be needed because that's saying to the lender, hey, less risk. I'm about to put some money in the game, right? To let you know I'm serious about getting this. And so there's down payment assistance programs where you have zero down payment. We got 1% loans out here where you put down payments 2%, 3.5. I'm telling you, there is very down. But here's the kicker that I want you to really take on. And I notice this a lot on social media. A lot of individuals say, oh, all you need is a down payment. All you need is 3.5%. No, honey, it's more than that. If you're not able to have a good negotiator, a real estate agent that can negotiate a seller credit, you got to come with closing costs. And those closing costs, they average around 4%. Sometimes more than that if you're going to refinance, but just look, just think about it. If you're closing a loan, everything may not be able to like, okay, for instance, and I'd rather just give you an example. Let's say you're closing on you have a $300,000 house purchase price, right? And it comes back at 350,000. You can be able to negotiate with the seller to you say, hey, I'm gonna get you're approved for 350,000. Okay. That's the difference. You approve for 350,000, excuse me, and the house is appraising for 350,000. Okay. And let's say the purchase price, you tell them, say, seller, I'm gonna purchase this house for 300,000. Well, the seller, you can come back and say, hey, seller, want to be able to have my closing costs covered, right? So I'm going to purchase this house for 325,000, and I would like a seller credit of $15,000. Which now they're getting the house for 305,000 on, profit wise. This is before commission come out, okay? But now you're getting your closing costs covered. That's being creative with the financing. So you don't necessarily have to bring as much to the table when it's time for you to sign that loan and sign those docs to get that house. You don't have to bring as much. So you can be able to negotiate to be able to have those closing costs within the loan. But the value of that house has to justify why you're doing that. Okay. Now, if y'all got any questions, because honey, I know I'm giving y'all some strong black tea tonight. Okay. Let me know if there's a question, please inbox me or put it here in the chat so I can see it. And if not, let's keep it going. Okay. All right, so these are the things you need in order to get the house funded. So let's talk about closing, getting your house closed. All right. So the what's going to determine if you can get your house closed? There's a few things. Credit score. I think we talked about a few weeks ago. Credit score is going to determine what program you can qualify for. All right. And so there are programs out here that can help borrowers as low as a 500 credit score. Remember what I told you. There's lenders out here that are wanting to help you afford a house. And one of the ways they're doing that is being able to have credit, have programs out here that go as low as a 500 credit score. All right. What's also going to help you close? Whatever you put on that application, can you back it up with documentation? Whatever you put on the application, can you back it up with documentation? Okay. You have to, because if there's something on there, the underwriter has to verify that information. All right. They have to verify it because at the end of the day, you got to think, Uncle Sam, the government, they are, you can get audited, all of these things when it comes to these loans. I mean, this is somebody's livelihood. So we definitely want to make sure that you are getting what you deserve in terms of um, not frauding people, but being able to actually qualify for that loan. All right. And so they're going to ask for documents throughout the process to verify what you've put on the application. And they want to see, can you pay for these closing costs? Documents is going to back that up because lender is not closing on no loan if you don't have the money to pay for it. It's just that simple. All right. Then you got qualifying mortgage. That's what QM is. Unless the lender knows, and that this is for my VA FHA conventional people, okay? It's gonna let them know, do you fit within the which goes to underwriter terms, right? The lender's guidelines, the laws, right? Because there's only a maximum amount of debt to income you can have. There's only a maximum amount of down payment that you're able to put in there, right? So in terms of loan to value, there's only a maximum amount they can go to. And so all of that and how much you pay for that loan, right? Whole nother topic, honey. I ain't even about to go into that. That's a whole nother discussion. But that allows for you to qualify yourself. All right. So these are just things that on the back end, I know it's boring, but you need to know if you don't fit within those guidelines. Yes, there are other non-QM possibilities, but if your credit score doesn't meet that, you can't get that particular program or access to that loan. So, quick story. Um, I I had a lender, right? And we're partnered with this lender that can go as low as a 300 credit score, I think 350. All right. That may have changed at the time of this viewing that you're watching this. Um, but they go as low as a 300, but you're going to pay for that 300 credit score, which is why, I mean, yeah, but that's not, that means you didn't pass QM, right? You didn't pass the quality test. You didn't pass the normal guidelines of the state the federal law has put in place. So now you got to go and get another type of law. All right. So this is what, as I said, there's different ways, there's different programs, of course. So this isn't always a factor, but usually, most likely, as always, especially if you are a home buyer, right? This is something that we factor in. As an underwriter, right? They go by what the law says. They cannot say, hey, I like this person, so I'm going to go ahead and pass them through. It does not work like that. There are checks and balances that have to be put in the system. The system will red flag. There are exceptions sometimes that the underwriters forget, but it's but like I said, you got to give something in order to get something. So it has to be some things in place that not only allow for you to say, okay, this person do qualify. They just got this one exception. Like this is the only thing, right? So they are able to do that. And underwriter looks at this they even get before you even get started, right? When this process is happening, some lenders, I told you about the to be determined loan, right? During that process, so they're looking, are you spending credit cards? Credit cards, if you're blowing them up, is going to affect your credit score, which means you can no longer qualify that program because they do pull your credit at the end before they close the loan, right? And then after that, if you're like a W-2, they're going to check again if you still got that job and your score still qualifies you. And that you didn't take out debt, which caused your monthly payment to go up. All of these things matter. It matters, y'all. I'm telling you. If you when it comes down to it, if you don't understand this, all right. So I want to say, and I want to say this, right? Um, so I saw where a particular person, I'm not gonna call their name out. It won't be that way. There's a particular person right now, and these are a few people, right? A few people. So I'm gonna say I'm gonna put them in a group. We're gonna group them, right? So these particular people have been promising individuals that if you pay me a certain amount of money, I can help you get into the real estate industry, right? I can help you fix it with this property. I can help wholesale. I got all kinds of stuff, right? Because you're looking to become an investor. You want to be able to invest so that you can grow your portfolio, which I get. But here's the thing, that same 20, 30,000 that you just spent for that individual to tell you how to do something, you could have took that $10,000 to $20,000 and bought your own property. All by just talking to an individual, right? As such as myself, a loan officer, if you have somebody you trust that really knows strategy and not just counting you as a number, right? Just to get a loan, but really sitting down with a qualified mortgage professional that has to be licensed, we can sit down and say, okay, this is what you have, this is what we can do, this is how much you qualify for, go get your property. Versus paying someone $20,000 on top of you giving them 20, 30, 40, $50,000 to go and help you learn the process. Like, that baffles me because I want you to think of it like this. If you are a business and if you're looking to invest in real estate and you want to use your money, then you gotta do the due diligence. And I know a lot of podcasts have also been, getting the heat for this, right? But if you are looking to really purchase a property, then you gotta say, okay, I got this lump sum, and what can I do with this lump sum? You can, as I say, you can take $10,000 to $20,000 and be able to get a loan. You just gotta know what you are doing in that process, right? And so that's why these these lives every week, they're not here to entertain you, but to educate you on the side that a lot of individuals don't talk about, right? They may talk about buying a home for the first time, but what about if I want to buy my first property? What if I want to fix my house and move out and get another property? Like, I need to be able to be multifaceted in how I can move in this real estate. So if something happens, I can either rent it out, I can either refinance it, or I can sell it, right? And so you want to have a professional that is licensed that can give you different options because there are different options. For instance, it's the lender partner that we have right now, and I love them because it's we was just strategizing about something. He said, "Hey, it might be 15% down, but you can ask for seller finance at 15%, and we got a deal." Or there's lenders out here that say, "Hey, you can get the money right then and there as long as you know that you got it." So you gotta understand a way there's so many different lenders and there's so many different ways that you can get a real estate that you don't necessarily have to always wholesale or be able to, pay someone to get the information. You don't have to do that, right? So I want you to understand that when it comes to being funded, you gotta show that you have some money, right? You still gotta pay for your appraisal. You wanna do your inspection. This is you as a business owner, you making sure that you're doing your due diligence so that you don't take on a lot of risk for yourself. The last thing I want you to do is put yourself in a situation where you done spent everything you have and nothing can come from it. So for instance, let's say you happen to invest in one of the and I'm not knocking anybody that does real estate and do these programs and sell money for these programs or anything like that. Not at all. I'm telling you as an individual, no, do your due diligence, right? So let's say you buy a fixed asset. We have something called like a delayed purchase, right? Which means that as you're fixing up the property, well, we got fix and flip homes, of course. Um, where let's just talk about that since I said a fix and flip. So you might be wanting to do a fix and flip, and you don't have to necessarily go pay somebody to do a fix and flip. You just put in a loan with an individual or me, hey boo, or me, but you can be able to put in a loan to be able to get that fix and flip if you have money, and be able to work out in terms of the down payment, which 15% owner finance, 10% from where you may have wholesale the property before. Okay, now to purchase the property, I'm gonna put this 30K in, and I'm gonna make 200,000. Here's the thing about the fix and flip loan, right? They will fund you the purchase. So, I mean, the refinance, excuse me, they will fund the refinance if the after repair value is there. So they will fund that for you. But you have to have the money to acquire that loan. But if you're putting that somewhere else, then that could put you in a situation where you could have just bought you a property and and I'm not gonna say taught yourself, but as I said, there's ways that you can be able to purchase a loan and be able to have those renovation costs within that loan. Um, if you are not looking to be in a home for long, right? And you just want to, let's say you want to fix it up for 12 months versus 3 months or 6 months, right? You want to hey, I want to take my time because I'm funding this property and I know that I can sell it for top dollar, right? And you can get a bridge loan. And what that is just basically a short-term loan that allows for you to go ahead, acquire the property. You can either fix it up or you can go and sell it again. It's just a short-term loan. And so if you know these products, then you're able to now benefit from having these products as a tool that you can use whenever you're looking at acquiring these properties. Now, I know it's a little different when it comes to uh, tax purchases, things like that. And I get it. You can be able to, like, talk to somebody that does business credit. Credit King Steve does business funding, business credit. He helps you, get business and personal credit. Shout out to Credit King Steve. Tell him Tashawna sent you. Put his name here. He has a program, Credit King Steve program that allows for you to build your credit up and be able to get business. And he used to work for the IRS, y'all, qualified. Okay. Um, but I want you to know that you got to put yourself in a position that's going to not only allow for you to win, but allow for you to really acquire a property without you having to spend thousands of dollars to learn it, which is why I'm giving you this tea every week so that you don't have to go out and spend thousands of dollars to just go and learn it when you can learn it here for free and be able to go and acquire your property with those funds. Okay. So if you are ready to see if you qualify, go ahead and schedule your own real estate discovery session. This is a no impact on your credit score. And let's set up your strategy that's really going to allow for you to win. As I said, if you're watching this as replay, make sure you put replay. And I would love to know what state are you listening from. And also, as I said, with this real estate discovery session, what we do is we go over your credit, what's on there, can you qualify for potential programs, and then the mortgage process as a whole, but more importantly, it's tailored to your goals and what you're looking to do. All right, beautiful bosses, I appreciate you. I love you. And until next time, every day, stop. I'll take you soon.